Hello and a very warm welcome to moneycontrol.com. Mr. Chakraborty, thank you so much for joining us. Delighted to have you here with us on Money Control. Let me begin by asking you, where are we in the process of the merger between HDFC and HDFC Bank?
Well, it was, as you know, it was perhaps of this millennium one of the largest mergers globally, as well as on the financial sector, certainly the largest. I've not checked the numbers on that, but I would say that. Though, of course, idea was not to write history books when we did the merger. Idea was to bring together the forces of two organizations which had built themselves up. They could work together in unison and derive much more synergy for the end customer, both on the deposit side, that's liability side as the financial sector calls it, as also on the asset side, so that a full bouquet of offering could be made. And the costs then could be cut down by having low-cost deposit. The core still for the merged entity would remain the main customer, who is also our depositor. And to protect the health of the deposits, it's would always remain the core concern. So that bank is absolutely stable, and it takes care on that front by providing extra cushions and buffers wherever they are required.
Okay.
Because it's also systemically important bank, but more than that, the responsibility that we feel towards those people who bank with us, because the deposits with this bank are 11% of the total deposit of the entire banking system. And that's a responsibility we feel as a board weighs very heavy on us, and one needs to respond to that. There are three major factors, three major pillars, if I put it, the entire merger process is governance, the culture, and the systems. What is being brought in terms of the parent reverse merging is also, excellent housing product, which was top of the line in the country. And the seconds were not even in the second position. So idea is to retain that. Governance and cultures were largely in sync. So therefore, it should not be very difficult. But as I said, in governance, we'll continue to be much more responsive to the requirement of conservatism, which maintains the safety and security of the people who bank with, and take care of the customer needs. Customer service thereafter takes precedence. To that extent, the systems get driven by it, more of IT, but ensure that there's cyber security norms, data privacy norms get taken care of.
Right.
Culturally, these two organizations are pretty well in sync. They have been talking to each other. But despite that, two companies in the same setup tend to work differently, behave differently. And to protect the culture which HDFC brings in and to imbibe the best possible values in the bank is something leaders on both sides are working on. Important thing is systems. Because the bank and as well as HDFC Limited takes pride in its systems.
Right.
HDFC Limited had fantastic housing loan systems, which would not only would continue to work as they are, but they would also be, as the time goes, would get further supported by further investments, which are going to be low-cost funds,
right,
which support the asset funding. Along with that also come subsidiaries, which are big in their own right, like HDFC Life, HDFC General, which is Ergo,
right,
as well as HDFC AMC, which is the capital, which are very large companies. So now their growth would get a fillip. And naturally, the holding company, now the joint company would be the bank, would capture the valuations of distributing their products more aggressively. So on the other side, the customer tends to get everything in one go. He gets the insurance, he gets general insurance, he gets investment products, he gets a housing loan, he gets a education loan, all in a single bouquet. So large number of branches which the bank has, and contrary to what other banks are doing, HDFC Limited is the only one, bank is the only one which is pushing for increasing its branches.
Okay.
Because we do feel the need to capture the nascent upward swing in the semi-urban and rural sector.
Okay.
And we see that the very sustained agriculture growth has created a surplus, which needs to be supported with credit. On, of course, always on the terms which are the credit does not get lost, and the very sound credit policies are followed. The bank boasts of some of the best credit policies around the world, and they would continue. But we will be amazed to know that it is today the largest provider of credit incrementally in the country.
Okay.
With NPA perhaps one of the lowest in the industry.
Okay.
And even on the loans where everybody else defaults, loans like Mudra and all where defaulted, it has managed to keep the rates much lower, much lower than the rest of the industry.
Okay.
So that's critical because
Sure.
the safety of whatever investment of the funds that depositors provide to take care of that is critical. So that's how the merger is working out along these principles. And for those systems, quite a few groups have been created, an integration committee has been created, all possible experts have. So we have not handed over to some third party or a consultant that you bring the merger together.
Okay.
It's being driven by the leaders on both sides. And a number of groups, which are various systems, there are more than 30 as we talk, who are talking to each other and sewing up so that entire thing is seamless. As and when the regulatory process gets over, there are 5 regulators that one has to deal with. All of them have been very diligent, but at the same time very, very supportive.
Okay.
Because the idea is that the whole conglomerate should push a lot of credit and other instrument support for the system as a whole.
So any timelines that you're working with?
Well, in this next financial year, it would happen at the earliest. But
you mean 24-25?
23-24.
The current financial.
The one
right, of course,
one
yes.
which will start on 1st April.
Sure.
Because I do not want to prejudge the court's order, that's NCLT's order, but I expect it soon. The moment that happens, then the rest of the train follows. We are also listed in US,
right.
New York Stock Exchange, so we have to meet those requirements also.
So it's a mammoth exercise. You mentioned about opening branches, additional branches. Can you just lay out some of the priority areas for this merged entity and any numbers that you can share with us?
See, the merged entity would have a balance sheet of 25 lakh crores and roughly advances in the range of 22 lakh crores. We grow 20% year on year, 18 to 20%. We'll continue to do that.
Okay.
However, for that, we'll need the elbow room because the two companies come from two different accounting systems. NBFCs have Ind AS, banks have IGAAP, and also the regulatory system for keeping reserves, etc., are different for the NBFC and different for the bank. To an extent, we get that gap which is adequate for us, the glide path which is adequate for us to sort of do it. Not too much of fund we do have to commit for meeting those requirements. On the day zero, growth would continue at pace as you're saying. If it doesn't happen, perhaps it would be marginally impacted. So, but RBI always sees this in the positive light. So, I do expect a glide path. As user side, one would expect a long glide path, but a reasonable glide path if we get. That's important for any such merger, where two entities from two different regulatory systems are being put together on a given day. At the end of the day, it's on that day when both the systems, till that day, they have to operate in separate regulatory systems. So you have to build in buffers and then bring them together, which takes away some amount of capital. We would like to provide as much capital as possible for credit growth. Because that we see as a requirement of the nation. So if we get a good glide path, more credit is available. If we don't, we get a sharper glide path, that gets reduced a bit. Initially, of course, after a time, everything becomes same.
So you mentioned mudra loans. You mentioned about opening branches in semi-urban and rural areas. How many more can we expect? How many more branches can we expect? And what's the kind of loan book that you're targeting?
As I said, our loan book is roughly in the range of 17 lakh crore today. It grows every year 20%, 18 to 20%. And that's the kind of growth one has maintained over the past. I would not like to give a forward guidance on that. That would be not correct, but I can tell you the past.
Fair enough. And in terms of branches and your focus areas?
Again, branches, our focus is to have a very substantial increase in branches as it goes along. However, again, it's driven by the areas that you choose, how that area is doing well, driven by availability of infrastructure immediately and so on and so forth. But the branch expansion has been one of the largest of any of the banks in the country. And all the branches break even. The new branches break even after 2 years. The other branches. And idea of these branches is just not for the sake of opening branches. That we reach out to the targets that I mentioned. The MSMEs, the agri, the nascent industries, areas we have not been able to reach out, the states we have not been able to reach out but are growing.
So is there a tentative list of states and areas that that you're working on?
If you see the dots on the map, you will see that the dots are pretty well spread out across the country. So because this bank we believe is also the bellwether for the Indian economy, we try to capture the various facets of Indian economy, of its various industries, and similarly various geographies. We wish to be in various geography. And as infrastructure keeps opening, you reach out more. And that's important. Digital, of course, is very critical. Opening branches doesn't mean that you don't do digital. We are leaders in digital. But then digital is always assist. So the shape of the new branches are more likely to be assist in nature than whole hog, good old style branches that one used to see.
Interesting.
Much leaner, much more effective, and leaner branches, obviously.
That's quite fascinating. And in terms of digital adoption, any details that you can share with us on what can consumers expect?
Well, on digital adoption, idea is to make it as smooth as possible for the consumer on across various products, and that's both on the liability on the asset side. So it's a very constant journey. Nothing in things are known. People know there is a mobile banking. People know there is net banking. People know that there is a digital payment which comes on the mobile. And then there are credit cards. idea is to make each of those journeys which customer has continuously smoother and smoother, right from onboarding till he gets his statement and pays or gets his account statement.
Okay, so more emphasis on digital and smoother integration of digital with customer experience and more branches. Any number that you can share with us on the number of branches that we can expect in the next fiscal?
I deliberately don't want to put down a number. I'll always wait till the end of the year to see that number, because it's driven by the availability of infrastructure and being able to open up. So, that extent, though, there are internal targets set, but I
you don't want to share.
I'll wait for the end of the year.
Okay, fair enough. How much foreign investment can we expect with this merger coming into?
Well, I'll wait to see. It's it would be part of. I expect it to be part of, as one seen in the part of MSCI index. So that should bring in additional money, at least from the passive funds. But that will depend upon the appetite of all these funds for the emerging markets. So there we are part of the overall emerging market domain and India as a domain.
Right.
And then we, the bank captures a fairly substantial part of it, having a good weight in the Sensex. Largely in the passive fund indices, it tends to capture a large weight. But it's a function of how emerging market is seen by the funds which are located in the advanced economies.
Okay, so there's no tentative figure.
So I would not hazard a guess on that.
Okay.
It may be inappropriate to hazard a guess, but it should be a good number.
Okay, what is a good number? 100
Wait
billion?
and see. I think something should be left for future.
Okay, so you're saying that the merger will be complete by this 2023-24, and any challenges that you're facing at the moment that are that you're hoping that resolution will come in, which will facilitate?
No, small niggles are always there in these kind of things.
Right.
That apart, frankly, none.
Okay, so you said cultures are very similar, so that's not an issue.
Yeah, governance again, because this is not a personal promoter-driven companies.
Right,
where, those kind of issues tend to come. They are both board-driven companies. They didn't have any prima donnas, but leaders. It had leaders like Deepak Parekh, KK Mistry, Shashi, who is the CEO here, Renu Kannad, who is in HDFC Limited, and a host of other leaders who are there in the bank, who are very good, but you will not hear their names, but they have been driving this fantastic institution. And the boards are very strong. It's a board-driven companies, and they take their work very seriously. And there's to ensure that the bank remains within the guardrails. So, with that kind of a strong governance, they are able to take care of both culture and systems part, the integration. And the senior management always remains very mindful and very, very dedicated. And the incentive structure across the organization, senior, middle, and lower levels are fairly aligned with the overall organizational objective.
Okay.
Because they meet organizational objective, not a promoter's objective. It's a very professional company.
Fair enough.
And that is very critical for its success. I find that part, which I just mentioned, it's has been extremely critical for the success. The bank was the first one to introduce restricted stock units to employees which are far junior on the hierarchy, to make them part of the company's, the bank's growth. Those kind of things bring people along across the board, not just the senior leadership.
Absolutely. So, my last question. You have the trust of millions of Indians who bank with HDFC and HDFC Bank, and they've taken home loans. It's a household name, right? After this merger is completed, how do you see India's financial landscape in the banking sector evolve? And what can the consumer expect? Because the last few years did see an erosion of trust when it comes to banks, right? A lot of negative headlines dominated the banking space. So HDFC, is carrying this mantle at the moment of redefining a lot of governance issues that have plagued the banking industry. So I wanted your view on that.
Well, as I said, this was one of the more trusted bank when the entire banking sector was going through a turmoil, more because of the asset side issues which came up,
right,
and were identified, and the IBC and all those things came up. People really got worried about. Partly is also behind in the new, now as we see the banks have, large number of banks have come up. What we intend to keep is, day after day, the good old boring banking,
okay,
where people are able to bring their money in, keep it safe, borrow for their needs of myriad nature, right from housing, auto, personal requirement, credit cards, MSMEs, large corporates, so on and so forth. So as a universal bank, one should be able to cater to them as seamlessly as possible. And the customer experience is, I would not say presently bank has 6.5 crore customers, and HDFC Limited has again fairly substantial number of customers, and many of them not necessarily overlap. So like HDFC's present housing loan product then becomes available to my entire 6.5 crore bank customers, and vice versa. So those banking needs to be provided seamlessly with least of the customer grievance remains a major objective. And that is what actually drives the corporate excellence, if you ask me.
Okay.
If people are happy, bank remains boring, that's the best.
So I'll conclude with this one complaint that a lot of consumers have, including me, that banks charge you for everything. Right? You use another ATM, you're charged. You ask for a checkbook, you're charged. You want to close a home loan, you're charged. You're just charged for everything. Will HDFC set a different trajectory for banks? You don't have to squeeze the consumer who's only parking their trust with you.
I agree with you that when we pay, we do not like. But if there is a service, there's never a free lunch, but charge should be commensurate. And I guess if that is the grouse, that charges are not commensurate, I'll carry the message back.
Okay. All right. Thank you so much. We wish you the very best with this mammoth merger, and we wish HDFC Bank also the very best. Thank you so much for your time.
Thank you. It was such a pleasure talking to you.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.